Morning.
What time is it now? I'm not talking time of the day, I'm talking time. December, right? Okay, everybody is thinking about holidays, fun, so what could be more fun than talking about IRS during December? So that's precisely why we picked December. Another reason why we are doing that is because that's the last 10 days when you can make some decisions that actually matter for your pocket. So that's why we're interrupting the fun for having 15 minutes of useful information about what you can do to save money and avoid mistakes during the last 10 days. Okay, anybody wants to hear that?
Yes.
Okay, and let's go. We're having some decisions during this time that are time related. We can do it in December, we can do it in January, and that's what we're going to do right now. Very quickly what we're going to look at, and please if you didn't have your handout, find it somewhere on the chairs around you. Everybody should have that one-page thing. We are talking about paying property taxes, buying some stuff for business, buying property, selling property, charitable donations, contributions to IRA, taking money out of IRA, converting IRAs to Roth IRAs, selling stocks or mutual funds. Okay, and we're going to do it in 15 minutes. Or less. Where is it? Car insurance guy. Okay. When does an expense count? That's what we start talking about. Is okay. First thing which is very important to understand is expense counts when you look there is not when it incurred. And it counts when it's paid. Why we are talking about that? Because there is one item which is of big confusion for everybody who is doing real estate. It's property taxes. When are property taxes incurred for 2013? 2014, when? Right now, right? Everybody got bills.
December.
When does it count for tax purposes? When the IRS looks at that? When it's paid. So we have a decision to make right now. If you are going to pay the tax bill in December, in the remaining 10 days, it's going to count for 2014. If you wait until January to pay that bill, it will count on 2015, even though on the bill it says 2014 taxes. Is that clear?
Yes.
So, okay, our next question then would be, what is considered paid? Okay, we just talked about that. Property paid in December, deducted in 14, January in 15. The next logical question is, what does it mean paid? When is it considered paid? That seems to be very simple. Well, paid when you gave money, but there are a little bit of controversy here. First, checks. Checks are considered paid when they are mailed, not when they appeared on your bank account. So technically, if you drop your check in the mail on December 31st, it counts. So on the county website, if you look at that, it will be posted somewhere in January. But what matters is when it's actually mailed, which tells you mail it a little bit in advance. Because if you are going to really mail it on December 31st, you might need a proof that you mailed it on December 31st, doing certified and all that stuff. You can save the hassle if you send the bill a little bit in advance. Second situation is credit cards. When credit cards count? When they are charged. Very important, right? When they are charged, not when they appear on the statement and not when you pay the credit card. When it's charged. So if you go online and hit pay button, once your order is sent, that's when it counts. So you could pay, again, technically on December 31st, just before opening your champagne, but then print the screen and have the date there, so it shows the date when it was actually charged. And next one is another item of confusion, escrowed taxes. If you have an escrow with your mortgage company, and you are paying taxes there every month, it feels as if you are paying taxes every month. But it's not, because it's an escrow. Escrow is your account. You are putting money from one pocket of yours into a different pocket still of yours. So when it matters is when the taxes are released from escrow. So the only way for you to know that, you don't have a control over that. But the only control you have is cancel escrow and start paying yourself. But if you have escrow, you need to find out when your mortgage company actually pays taxes. In December or in January. Years ago it was December as a rule. currently nowadays more and more companies pay in January and some pay past the deadline, and then you are responsible for late fees, by the way. So watch those. Next we're going to talk about rules of thumb to do, and rules of thumb is exactly, everybody has different thumbs and different rules accordingly. So first is when to pay those property taxes. Our first rule is okay, on flip properties. But remember, before we go further, we talk about rules of thumb. That means some of your thumbs are different. It will not necessarily apply. So, but generally speaking, on flip property, you will want to pay it in January. On rental properties, you generally want to pay it in December. I want to stress the word usually that says there. Usually means there are exceptions. Case-by-case basis, but again, as a rule, you would want on the rental property to pay it now. And on your personal residence, you normally would want to pay it in December. Again, minus certain exceptions. Next, when to buy stuff for business. Because I get a lot of questions nowadays, as I'm saying is, okay, for tax purposes, should I buy now, or what should I buy? Should I buy a truck? Here is my answer to that. You buy it exactly when you actually need it. Because a lot of people are buying stuff and spending money on things they don't need. I'm asking, why did you do that? Oh, well, because that's a tax deduction. Tax deduction, guys, works like that. Tax deduction is discount. So if your taxes are 25%, you are getting 25% discount. You are still paying 75 out of your pocket. Somehow some people are under the impression that if you can use it as a tax deduction, that he pays for that. No, he pays maybe 25% of that, maximum. Next is, okay, but if you do need to do it, usually you would want to do it in December for obvious reasons. So if everything is being equal, you already know that you need a new computer, like I do. I'm going to buy it in the next 10 days, so it will count on my taxes on 2014. And next one is, there is one exception. If you just started business in 2014, you have no income yet, didn't do a deal. First, it's not too late, like Tom told you. You have 10 days, you can still make income in 2014. But if you are not going to, then you may not want to spend money on your business right now in 2014 because it may not actually help you. Next one is when to buy property, opposite side of that. And again, the answer will be, that's not a tax question. You are buying property when? Exactly when you can. When you have a good deal and you want that property. Don't ask me should you do it now or later. But everything else is being equal. Then in December. So if you do have a deal already, which you could close now or after the new year, try to close it sooner. For many reasons, including tax reasons. Next one is when to sell property. Another question I get all the time is, I want to sell, do I do it in December or January? What's my answer to that?
You have a ready, willing buyer.
Everything else is never equal, of course, so I can only answer that question when everything else is equal. What I mean, everything else is equal is this. You have a buyer, contract is signed, you could close between Christmas and New Year, or you could close first week of January. And that we call as close to everything being equal as it can be, so that may be a tax question. Why I'm saying it's still not everything else is being equal? Can something happen between now and the first week of January? What?
They can die.
The buyer can die. Why you always have to be some negative person? What else you're going to say? He can get divorced, he can get drunk, yeah, right. Yes. He can change his mind. That's the simplest thing that can happen, right? People do that. People do that. I met couple who change their minds. Okay, but if you're expecting a taxable gain on the sale of the property, and again, assuming everything is being equal, then you would want to delay. And what do you expect next? If you expect to lose money, first you need to take more classes here. If you expect to lose money and not be in that situation. But if you do, then you usually would want to do it sooner in December. Next one. When to make donations. Okay. First, when you make donations, also not tax questions. It's your preacher's question. Ask them. Okay, but assuming you are doing that, it depends whether or not you have enough of what is called itemized deductions. Now, if yes, if you do have enough to have itemized deductions, you want to do donations in December. If not, you would want to do them in January. If you have no idea whether you have not enough, then come in February where we teach a class here. Then I will explain what itemized deductions mean and what I'm talking about. Okay, same answer that I see at the bottom applies to homestead, for homestead taxes. Homestead taxes depend on whether you have enough for itemized deductions. So if you have enough for itemized deductions, you will want to pay your own property tax in December, if not in January. Next, we are talking about decisions related to your retirement accounts. Nate, where is?
He's back here.
Okay, so you can talk to Nate about opening accounts, the guy from Quest, but here is very simple, again, rule of thumb is contributions for 2014. Generally, you have no rush, you have time to do it later. Again, I'm stressing January. There are some types of accounts that actually are time sensitive more than that, but most of them are not. So in most cases, you have time to do it after the new year. Distributions, meaning is you decided you need to pull money out of your IRAs. When we have self-directed IRAs, generally speaking, we do not want to pull money out of those IRAs. But if for whatever reasons you are doing that, then you would probably want to do it in January if you can wait. And conversions, if you have traditional type of IRA and you want to convert it to Roth, you normally would prefer to do it in January. Reason is because when you convert, it's taxable income, which you would want to delay. And another warning at the bottom is IRAs are very complicated stuff, a lot of small rules, so if you are not sure, get somebody's help. Ask your accountant or custodians like West, people who know exact rules about IRAs. Next is when to sell non-real estate investments. When to sell those? We are talking about selling non-real estate investments, like your stocks, bonds, mutual funds, whatever else you own other than real estate. When? Well, if we were in some other real estate club, not here, there would be a guy who said immediately and put everything in real estate. Okay, but other than that, what else? Again, not a tax question. We are talking about your investment. You made that investment with the purpose to make money. You sell it when it's what? No longer making you money, right? So it's not a tax question. But again, assuming everything else being equal, consult a professional. This thing is complicated. Sometimes your consequences are not what you expect. So if you really want to see tax consequences, try to find somebody who in the next 10 days can do calculations for you and help. Couple closing slides that we want to look at before we go to our main presentation is this. Bookkeeping. Okay. Bookkeeping, like I put here, is there is nothing costlier and easier to fix to businesses than bookkeeping. Right now is good time to deal with that. You can increase your cost by having bad bookkeeping. Your costs can go up by 15 to 40%. Earlier this year, we spent 2 days here at the Wealth Club teaching correct bookkeeping for real estate investors. It's now available on recording. Okay, if you missed that presentation and want to take care of that, talk to people at the Wealth Club about recording of our seminar. So, if you don't want your money go there, of course, that's an alternative. You do that or you fix your bookkeeping. Okay, there is time, at this time everybody asks, what about new tax laws? New tax laws are not new right now. Very few things changed. At the last minute, as usual, the Congress stopped some good things from expiring. They were set to expire, they are not expiring anymore. So practically speaking, very few things changed, but we will have more details about that in the new year. And if you are not on my email list, that's your fault. Get on my email list. My blog post will talk about changes, but this year we don't have a whole lot to worry about. But very quickly I will tell you one change which is very new, nobody knows about it. Guys, you will be among the first to know about suggestion. We have a proposed form, specifically proposed, not taken yet, it's not a law yet. Simplified Form 1040 for real estate businesses specifically. Form will be very simple. Here's an example how it would work. We take total profit from flips on wholesales, let's say 70,000. Let's say total rent collected 30. We add that up and we get 100,000. Then the next line on the form is, we multiply it by 50%, that's your tax. But good part about it, we have credits. All landlords get number of evictions, 5 times $500, that's the credit you get against that tax.
Awesome.
And the next one on the flippers, get $100 for each undocumented contractor that you have on your project. But if you want real rules are coming in February. Come here, we have full day, morning for landlords, afternoon for recappers and flippers. Merry Christmas, happy holidays, and happy New Year, and see you in February. Thank you guys.